Hello, everyone. I have to say today was a pretty boring day overall in the market. It was basically a flat day. However, I did not like the overall intraday tone of the session. I still can't believe that the Greece thing causes market sell-offs, but rioting happened in Athens. Is that really surprising? I mean, there's going to be a lot more of that. Just, it's inevitable. So it's always kind of shocking that whenever it starts to break out, the market sells off. It's probably just algo funds hitting the headlines. It's probably a buying opportunity longer term, but yeah, it's just weird to me. But overall, the market looks good. Volume was well below average today on the Nasdaq, and it was below average on the New York Stock Exchange. S&P 500. S&P 500 barely pulled back down, only 0.07%. The Dow Jones Industrial Average was the best index, down only 0.02%. The Russell 2000 was down 0.69, and the Nasdaq was down 0.12. But good news is that after hours, I'm not sure why, but I think it's because of Netflix, which we are currently long. The futures market has rallied. I don't know where it's at now as I make this video, but an hour and a half ago it was significantly higher. So we'll see if today is just a normal pullback. Unfortunately, with the normal pullback, though, sometimes some stocks overshoot where you want them to go. RDHL is a speculative long position that we recently took. Excuse me, on an end-of-day basis, it is closing below the low day of the signal date. That's a 50% sell signal. Whenever it closes below 17, that's a full sell signal. And or you can sell it all off. RDHL, my first sell stop triggered whenever it moved below yesterday's low day of 17.56. And then unfortunately, my next sell stop was at 17, but I was actually watching it in the morning whenever it actually went off. Yes, I get up really early over here in Maui sometimes. I have to go back to day trading full time, so you got to start getting used to it anyway. But I got to actually watch it whenever my sell stop trigger. The bid was at 1675, got filled at 1674, hit down 1670, and obviously reverse higher. So you can still hold half of it, but no matter what, RDHL needs to be a 50% sell. You can remain the last half if you want. Go ahead and use 1670 low a day. But to me, RDHL's gone. And shockingly, this one was shocking. And this happened later in the day, and whenever it showed up on the bottom right-hand corner of my screen, and I heard that ding that IB gives you whenever you get a sell order, I was a little surprised. But CAC failed miserably today. I had my final sell stop below the last pocket pivot point. Low, I don't even know if that was, yeah, that's where it was. So it was below the low a day, the pocket pivot point signal 229.75. Hindsight now, I'm thinking maybe I should have done 226.72, but even if I would have done that, it would have clipped that. So more hindsight tells me, okay, well, I clearly should have used the 217 lows of that June base in the breakout, because technically, once we break out of this box to new highs, the final sell stop gets raised to the low a day of the nearest base, and that's right back here in June. So by me using this level, I was cheating the stock of a potential big pullback, flash crash, a high-frequency trading shakeout. And that looks like kind of what we got on an end-of-day basis. It's a 50% sell. Unfortunately, I've been knocked out of all of it, but the chart pattern isn't that good anyway, and there's better chart patterns out there, so I really don't mind. But if CAC reverses up higher, I'm going to regret it. But I got hit 100% of my CAC position, so leaving with small gains. RDHL leaving with small losses. And FIX ad signal, immediate, basically failure. Heavier volume. Half of the sell stop below 23.18, boom, I'm out. The other half of the sell stop down here at 22.64, so I still have half of the ad. If on an end-of-day basis you haven't sold yet, you can sell your half with a move below 22.91. So if it hits 22.90, you'll be out of half of it. And then I'd leave the other half right here at 22.64. But not only did that new long signal not do much, the other new long signal from yesterday, GWPH, first sell stop for me is 124.51. Second sell stop for me is 118.20. Intraday, though, pretty big intraday reversal on heavier volume, so that's not good. So GWPH, not that good, action following a long signal. NBIX continues to rocket, so, what are you going to do? We missed out on that. The REGN ad is working. PGTI pretty deep pullback, but didn't move below my first sell stop, 1448. So it's so far so good. But even ABMD isn't really just running higher also. So, not everything's good. WSBF also is not just running higher. So with that note, I want to go ahead and scale back new long positions a little bit tonight because I don't have the highest quality long signals. Just went over all the sells, so now let's just go to the long signals. I got an add signal in ATSG. ATSG was only flagged or showcased in my canceling quality scan. It's barely canceling quality, and the only reason why I don't consider it speculative totally outright is because it's over $10 and because it's part of a previous big uptrend from below 350. So you can see here, going back to 2008, it's even part of a bigger long-term uptrend from below 15 cents. So ATSG isn't necessarily completely speculative. It's a little higher quality, and with us not risking much if we're wrong, if you use this as your final sell stop, you risk about 5%. Not bad on a position that we're only going to add 1% to, but it's a pocket pivot point signal. BOP is still of a high green level, even though it didn't stay even or rise compared to yesterday's levels. But overall, the chart pattern, you can look at the price pattern. Beautiful. Weekly, you can see how tight it is. So it's beautiful, and the plethora of pocket pivot point signals in this base, it's pretty good. So I don't really care that BOP fell from the day. So 1% add signal to this barely canceling quality long position. It's got good, decent numbers. Sales ain't that great, but earnings are supposed to really pick up this year and next year. So it's got some solid numbers. Then our new long position, extremely slim speculative. I normally do not post sub $10 stocks as new long positions for gold members, but since there were no high quality real long positions, and since this is a the last 3 quarters earnings and sales have both been growing by well over double digits, so it's got some real growth behind it, and it's part of the strong smaller cap banking, financial services kind of stocks overall. So SNFCA, giving it to gold members also, even though it's sub 10, canceling quality speculative. It was confirmed in my new 52-week high scan on at least average volume. So you got a BOP surge today, a big volume spike, you got a pocket pivot point signal, and a breakout to new 52-week highs with the stock closing at the high of the day. It doesn't get much better than that. The only problem is, once again, sub $10 stock, definitely super speculative. And today with the volume surge, it only averaged 33,000 shares a day. So no matter what, this is a limit order only stock, but all my longs are limit orders anyway. But if you go out deep into 2012, you can see the stock is part of a very extremely large base that it's creating. I'll tell you what, that big long base makes it look like the stock wants to do another measured move if it decides to break out. And last time it went from 1 to 9. So if it can do that again, that would be quite incredible. It's I see SNFCA go to 50. That'd be awesome, wouldn't it? So SNFCA, boy, this is a little risky. And even though I'm recommending it as 2% of the capital, if you're going to do 2%, 75% of your sell stop has to be below 672 to do the risk reward gain pain ratio correctly, because then the next logical level, you could use 662, but me, I do the ultimate lows in the base, and it's had 3 big shakeouts with 635 being the low. So my final 25% of this position, since I'm going to make it 2% because it's part of a strong sector, is 635. 75% of my sell stops move below 672. Pretty risky, ballsy, gutsy trade overall, but these small cap banking and financial services stocks have been good. And then also, I'm going to do a speculative long position in SBSA. Been watching SBSA for a while. Was watching all from February to April. Then it fell off my BOP scans. Restarted to show up in my BOP scans after 616. And so now it's really been basing in a flat base for a long time. And now the pocket pivot point signal is coming from a very symmetrical looking flat base pattern instead of the 2 previous ones. And the 2 previous ones didn't come with the high of day close. SBSA is closing 1 penny off its high day. So definitely good to go for me. 1% of my account capital. Once again, very risky, but we don't risk much if we're wrong. Basically, we're going to risk about 6% if we're wrong on 1% of the position. First sell stop below 656, final sell stop below 640. In this market, I'm going to use both.